All right, the real estate market is moving along, considering that we're in November, and as Robert puts it on this episode of Real Estate Chat, seasonality prevails. Robert, what do you mean by seasonality prevails?
Well, some months are busier than others, and some months are not very active. And you can sort of predict which ones those are going to be. Every now and again, you get surprised by something that acts uncharacteristically good or bad. And right now, everybody is wondering about interest rates, wondering about prices, wondering about. And we have a lot, as we've said before, of market participants waiting for definitive proof that the bottom has passed and they should buy.
Well, it seems to be that way because as we're going to see on charts that Robert has published on www.unclebobexplains.com, you're going to see the seasonality that Robert is talking about, but the increase in activity, increase in sales, decrease in inventory, which real estate agents were sort of against what was going to happen, but there's still a chance. Who knows? But here, let's look at what's going on for now, and then we can sort of save it to the Real Estate Chat annual end of 2024, beginning of 2025 episode that we're always excited about. Robert, take it away for November.
Okay, well, November struggled and is getting up around 6,000 sales for the month, which is not fantastic. It's very close, though, minus 10%, minus 13% from the average. So this is as good as we've had all year as president, close to the norm. And we were celebrating last May's peak, which was the 14th best May, and it was like 6 or 7% off the normal. So we can't say November is bad. The first half, the second half is better than the first half. We're still, we used to call the normal we saw for the whole last 18 months, it was lousy at 30% less. So now we're only subpar. And the magic thing is this number of sales with the huge number of inventory, prices are not really sagging. So everybody who's waiting for collapse is still waiting. Everybody who's waiting for another false rally in the spring is buoyed up. They think these are the indications that say that will happen. And everybody else is scratching their head saying anything's possible.
Well, anything may be possible. And so, for those who have liked and subscribed and who follow along, and you're on one camp or the other camp, the camp of, hey, everything's going to be fine and peachy because Canada is great and everything's going to go well, or the real estate haters. And again, I mean, hey, it is what it is that, collapse, doom, gloom, based on what the media is saying. But Robert, I do have to ask, and regardless of which camp you're on, even if you're in the neutral camp, I do have to ask, what is the significance of this bump up in sales? Because look, when you're looking here from 2020, well, last year, and 28th best, 24th best, mind you, seasonality will always prevail because it always follows. Interest rates have dropped. Everybody has said that. Yet, some commenters of our channel have said, inflation's still high, and you're going to talk about that in a moment. Unemployment is like there's still issues with layoffs, and the future is still, hazy. What contributed then to this big bump? It's certainly not specs, and like why are people buying?
Well, I'm going to say it's a reversion to the mean, except because we were off by 30%. So now we're off by 20 to 15%. So we're trying to get up to average. So you're right. Interest rates are the only things that happen differently. The huge volume of listings through the summer at the end of the spring made prices available. If you wanted to pluck a bargain, look for the low-hanging fruit, there were some people who were overextended and you were able to pluck a bargain. So people who've been waiting since last year, since the spring, who knows what, they moved and they plucked a good deal. And so what made it go up? Good deals made it go up.
No, there you go. There's always going to be still skeptics, wondering why that happened, but there's the explanation for it. Let's look at active inventory because the story up till recently has been, inventory was on the climb at peak. We were looking at way past 25,000. I think it was even hit over 30 at one point. Well, I mean, I guess it depends on where it's at, but like what we're looking at now is a month-to-month decline. Seasonality prevailed, which is the theme of this episode, as Robert said. Robert, explain to us then, is this expected to happen? And what significant indicator should really give the buyer who's still on the fence that final kick in the back and say, hey, you know what? Enter the market already.
Okay. There are a lot of properties that will never sell that are currently for sale. They are asking too much, and nobody cares that they're for sale. The representative that has the listing is scratching his or her head saying, why did I ever sell this property to these people? Now I'm burdened with trying to sell it at enough money so they make money or so they don't lose money, and I can't get that anymore. So what you're going to do is go down to that blue square, and if we look at the 16-year average for the month of November, it's 14,000. We're 50%, 55% above that. So um, there's too many properties by half. And until that rights itself, sales are not going to go high enough to change. We'll look at months next, but inventory is high. And so supply and demand are the two biggest things, plus consumer confidence, very um, moderated by interest rates. But that's all there is. There's three factors.
All right,
So,
let's pick your real estate broker brain here a bit because, like as you said, there's a ton of inventory. We have heard stories through our office meetings, through conversations with colleagues. Some of these are, sellers, owners who are, sad to say, some of them are underwater because they bought at peak and they cannot afford based on what happened to interest rates. How many of these listings, I know this is going to be hard to answer for you, Robert, but how many of these listings are opportunists that are adding to the motivated sellers who have to sell versus the opportunists who are like, you know what, if I get a certain price in this market, I'll take it. But if I don't, I don't. What would you say in terms of what the makeup of this current inventory is?
okay. Well, it's funny you say that. I got this pinned up on my wall, the way that owners think about prices. You go in, normally you go in competition with other firms and you have to give an opinion of value. And what I try and do is get people to say, okay, what's a range? Your expectation will fall into one of these categories. The top range is, oh, that's a dream come true price. I can't believe it. Then you have the top expectation. If, I want to get that. That's really what I want to get. Then if I can't get that, well, okay, it's good actually. Like I've been here for 15 years, it's not bad. And then there's, all right, I want to sell it, so let's just get rid of it. And then it's a bit less than what I was expecting. So sellers are human beings, and more is always better. And if a property is truly surplus, it's empty or it's underperforming rental, or it's they've moved from that house to another house, and now it's definitely surplus and it's costing them
Mhm.
money.
You know what,
These are all
that's
motivations of why the properties are for sale, and because of the variety. Uh,
mhm.
the mix is all out of balance. So there's
Well,
just
you
far
know
too
what?
many.
It's interesting. If for those of you listening closely to that particular part that Robert said, you can gauge the motivation based on, like, again, we know this as real estate brokers, but when you go into a house, how it's presented will affect the way a buyer perceives it. So if you go into a house, as Robert said, if it's vacant, if it looks like, they just dashed out of there and, everything is left in crumbles, or it's not well kept, as Robert said, it may be surplus because if somebody with a genuine intent and ability to sell a house will stage it, will renovate it if they need to, will update it, all that sort of good stuff. But you can tell who the investor who can't afford and, they don't want it tenanted, they just want it gone, right? Or somebody who just can't afford anymore, they went to a rental, they need to sell their place and everything in between. There's a lot of things happening these days, some good, some bad. And you just have to be prepared as a buyer to be able to read through that, using your real estate broker. Months of active inventory, because this gauges the health of the market. Where are we at, Robert?
Well, we are, gee, I thought I was going to say 398. But I guess on the day when I did it, it was just over four. But uh, November, no, 382. It should say 382. So we got a reversion, a revision that didn't quite catch it. So we are just around four, a little bit under. If we look at the next chart, which is the long-term view of it from Ron Hoth, And we see that they're going up all the way to 1990. 0 months, 2 months, 4 months, 6 months, 8 months, 10 months, 12 months, 14, 18 months of inventory. We're at 4. We've grown accustomed over the last 5 or 10 years to inventory at 2 months, 3 months. And I think all of us would love for it to go back to 3 months because that seems to be the nice mix of we have enough to choose from. Anything that's good does get multiple offers on it. And we know what to deal with that because we can become accustomed to it. Nobody is accustomed to 10 months of inventory. Nobody's
Hmm.
accustomed to 18 months of inventory, and it's only happened once in the longest time. So
And
the inventory is the real key here. And looking at months divided by sales, is the inventory bringing people into the market? Is the inventory keeping people on the sidelines?
all right, looking at inflation now, totally different topic, but related to this. You hear about inflation dropping. Now there's a bit of a bump up again, and we're going to get to the next chart soon. But first, this, Robert, I thought we fixed this problem. What's going on?
Well, it's a calculation based on a year ago. So your starting point and your finishing point is what your result is. So a year ago to a month ago, there was a 2% change on average. Some components were much greater and many components were a little bit less. And so it averages out on a weighted basis to 2%. So 2% was the target. And this result here in the United States has led most people to say, okay, we're not getting another half. We're going to get a quarter. We could not get a quarter and not everyone would be disappointed. Reduction in the bank rate. So everybody is second guessing things that they have no business second guessing. Who looks at the inflation segments and decides whether they're waiting for shelter and they're waiting for food? Like everybody is just browned off with the amount the prices have gone up overall. 2% should be okay. That's what they've been using forever. But at 2% a year, prices go up
Mhm.
um, they double in 13 years. So it's no magic thing. So here we are, cumulative, adding together since 2020 October, 4 years is gone up by 17.67%. So it's 4.5% annual average. So every price we're talking about now has got a built-in almost 18% over what the price was when you last thought about it as being okay. So again, this shouldn't be things that we worry about in the real estate business, but you gotta look at it because everybody's mad at prices. They're mad at food prices. They're mad
Well,
at
then
gas
let's
prices. They're
worry
mad
about
at everything. They're mad at real estate
let's
prices.
worry
Why
about
did they
prices
go
then.
up?
Let's
Why
worry
did they
about
go up?
prices. Let's worry about prices. What's the narrative behind the prices then?
Okay, so I'm making a guess here on November. But in the last 23 years, um, the price from October changed down by 0.46, which ends up being the second highest November ever, if that is a reasonable assumption. And it shows that we're down from the peak, down from the best month in the last 12, and down a tiny bit from last month, but completely in keeping with the seasonal pattern. So we can expect them to come in flat with 1.129, nearly 30.
All right, now here's the story that's going to happen in the spring. We saw what happened at where when everything went into madness in 2022. Seasonality prevails. Third time saying that now. It could be the title of this episode. What are we going to see in the spring? Are we going to see a big bump
This
in
is the
terms of
question.
price?
This is the question. This is the question. With that amount of inventory, you are not going to see a boom in the spring. And we saw two false rallies in 23 and 24, and we don't want to see that again. But we might, because in spring, all the young fellas get a new car and a new girlfriend, and spring is in the air.
We're going to find out. I mean, mind you, you remember 2022 not too long ago and why that peaked out in February, cheap money, low cost of money for a very long time. But let's bring it now to composite peaks and where we at in terms of this indicator here from the common peak.
Okay, we've been watching this, saying that the best model that we have, because it's the one that dragged out for the longest without returning to the previous peak, was in 1989 through 1992. or 1996 is when it turned around. So I drew some lines from the top and from the bottom, and we're just underneath the top line. So you can't use this. They call this technical analysis, but
Hmm.
there's all kinds of rules for using. You can't use it because, but we're just using it as a
It's
guideline. It's
more
a trend line.
more
It's
fun
a
for the
trend
real
line.
estate data nerds and geeks like us, right?
Yeah. Yeah, they can hate that for all they want.
Well, I mean, translation wise, nonetheless, I mean, you look at pennants, you look at bullish patterns, bear patterns, that cat bounce, all that sort of stuff. But it's interesting here that it's following what you've put here as the technical indicator, because if that is true, then the real estate haters get their way and it goes this way, right? But if it is false, then it'll break through this pattern. But Robert, I don't see that happening. Do you see that happening?
Well, remember that trend line is going down. So if our prices stay flat, then we break through it. Not this time,
Yeah.
but next time. And
Next
in the
time, yeah.
spring, we'll definitely break through that because that line doesn't change.
But
So,
if it follows, then what do we concern ourselves with if it follows?
okay, well, this is where the difference between the 90s and the 2020s is so much different. And even the events of the last week internationally make us wonder what's going to happen next. So, our big problem is inventory, which is why are there so many of those properties that are remaining for sale and not selling?
Hmm.
And there are a reasonable number of sales, but still less than the average for the last 5 and 10 years. And we really should be hitting the last 5 and 10 years if we could say it's good at all. So interest rates are higher than the buyer, the typical buyer, the mythical buyer wants to pay, and the prices are lower than what the typical seller wants. So it's finding its level still. There's no, I can't give a definite answer.
Perfect. That's okay. Relists.
Okay, well, this is my all-time bugaboo. The Toronto Real Estate Board prepares this schedule of every one of the MLS districts that it monitors and does a calculation based on the share of how many of the new listings that it's published were actually duplicates, the same owner, the same property, the same real estate broker as the representative, and within the original period of time that the first listing was for. And they call that a relist. Now they count it again as a new listing, but they do put it through as a relist on this chart only once a month, and they bury it. It's there in the stats column if you know where to look, but it's not on the front page of um, Market Watch where I think it should be, so that we could really see that they're overstating by 30%. If you calculate it based on the net number, 40% the number of new listings. So that's why we favor inventory, because inventory is a snapshot. Those are for sale in that time. But new listings has been boosted, and it just throws a monkey wrench into another one of our traditional benchmarks called sales to new listing ratio, saying in the last month we had some new and we had some with sold. So what's the ratio of that new and old?
Hmm.
And they have benchmarks based on what it should be, but these are all completely thrown out by this new phenomenon. In the past, if you wanted to change the price on a property, you put through a rerun. You kept the same listing and you just had a assigned price change form. And so you drop the price and you put it through the system again at a new price. Now they're canceling the whole thing and putting it through as a new listing, and it gets double counted. So this is what's
Right. Yeah.
throwing off our numbers.
Yeah. And
That's
I
the
think we have to
issue.
remember that because that inflates the numbers.
That's
Going
right.
back to
So
it, the illustrations
this
of
is
it.
the sales to new listing ratio. And the black number is the normal way that you do it. You just take the number that's published by the real estate board and you divide it by the number of sales. And in this case, there's 15,000 and something or other, and 5,000 and something or other sales. And that works out to um, an amount that's over the the long-term average. But if you subtract, which is the red number, the number of relists from that new listing number, you're actually 21% below the 10-year average instead of being 12% above. So it indicates the absolute opposite as being true. And so it is true, opposite to what the sales to new listing ratio publishes. And if we go to the next one, we see the the way the net number is calculated, that using the standard method, it says it's a buyer's market. 43% of the new listings are being sold. But if you subtract them out, you find out that actually of the new listings, the net new listings, 62% of them are being sold. So that's a seller's market and a buyer's market at the same time. And how can it be? Because the good ones are being absorbed and the also rans are just sitting there.
Well, as we do every episode, takeaway from this one, there are buyers that are still going to continue waiting. In fact, I hear stories about this from some of our fellow colleagues that, there are buyers that they're in dire situations, either rental is coming up due, not going to renew the rent, living in parents' basement, or have sold their place but looking to buy. But there's no sense of urgency. Robert, is it fair to say, Robert, that buyers have the leisure of taking their time over the next couple of weeks, months, because there's still a ton of inventory. Mind you, activity is going up. We are hearing multiple offers coming back. We are hearing preemptives and even, people coming in on the first day of listing with no competition, offering $100,000 more over ask, with no conditions, firm offer, deposit comes. Should there be a sense of urgency, or can we just take a walk in the park?
Yes, there should be a sense of urgency. I'm going to say the absolute opposite to what you just gave as a summary, that it's time for the sellers to relax because
Hmm.
inventory can only diminish in the next little while. Let's call it 3 months. February the 15th is the next benchmark that we're looking at when all this holiday time is finished and the winter getting used to and all that stuff. And if you're a buyer who's got a real need to buy, then this is the time to dig in. Because anybody whose property is for sale on December the 15th, they really want to sell it. And that's the person to go after. That's the person to make an offer. If you want to buy something
Hmm.
at an advantageous price, then that's the person to pursue. No time for buyer to take it easy. You just go after the one house that you want. It's the best of the bunch. Maybe there's 10 that you like, the best of the bunch, and make an offer on it. If the guy doesn't take it, well, it's too bad. You got 9 more. But only by making offers will you get yourself a bargain.
There you have it. Any questions, comments, concerns, leave it into the chat. Any questions about real estate? www.unclebobexplains.com. Reach out to Robert. Thanks for watching this episode of Real Estate Chat. Make sure you follow along. We've got some more exciting episodes, plus our year beginning episode coming up next month. Take care. Bye for now.
See you later.